Hello all and welcome back to mentfx. So in this episode let's get off of the mentorship stuff for now. There we go. We are going to take a look at actually a very small trade that we sent out. So again, this was the main trade you could have taken. This is not the one we sent out. The one we sent out looked more something along the lines of, let's go to a 2-hour chart right here very quickly. Again, this was a very simple trade we sent out, but I wanted to make this video for a few reasons. This was the trade we sent out. Just stop right there. And we're looking to target these lows right here ultimately. All right, there we go. So just very quickly, we can go and find where we sent that. So again, I don't send everything that I take, which, you know, a lot of people in here understand this is not meant for signals. It's more so meant to train people to become their own traders, as you guys have learned with the YouTube, as a lot of you have learned in here. So let me just quickly find this gold sell we found and sent. Yeah, there we go. So let me open the original of that so you guys can see it more zoomed in a little bit better. I guess it's going to open an Edge because it's the best browser available. If it opens, let's take a look. So here we go. Right, so what was sent out was actually within this price action right here, we had some highs being generated, right? So this, again, what do we remember is above every single high there's actually just liquidity. So the reason I want to make this video is kind of take us back to our roots. So despite all the crazy stuff we do in the mentorship now, looking at 15 seconds, 30 seconds, like even lower time frames, getting involved on crazy stuff like that, taking it to much higher Rs, seeing funded members take very interesting trades as well. This is a trade that I sent out, and again, your POI, actually we'll talk about that in a second. This is a trade I sent out that was more so just meant for the simplistic approach, to show you guys that you don't have to go crazy with this stuff, or make it seem more insane and harder than it actually is. What's actually going on here, right? Just consider it for a second. Price is moving lower, first of all, right? You see this huge drop down into this area, right? Price starts to take off. Again, we might have a snowflake distribution in here. We don't know. It's not that important. But what's important is we start to kind of ask ourselves, what's price doing? Remember the idea of understanding what retail might be doing, where liquidity is being formed, and how that liquidity is being manipulated or taken. Okay, so let's think about what happened here and why I sent out this trade at this point. So again, as you can see, it was sent before it even touched or tapped in. It actually took a little bit longer to tap in after this, and it actually traded way up into it. And we're gonna take a look at all of that in 1 second. But the reason for this video is to show you guys a simplistic approach to selecting POIs or even getting involved using just normal order blocks that we've spoken about in the past, just for a lot of you that kind of forgot that this should not be as hard as a lot of us make it. Now, there's a lot of information. There's a lot of ways that you can use that information, and there's a lot of different things that we teach, especially for those of you that have sat in through the mentfx block and the mentfx entryway in our mentorship, and you guys can tell that, you know, there's so many concepts that can be taught, but ultimately it's nothing more than a derived form of something else. It's kind of like options and stocks, right? Options are nothing more than a derived price of a stock. Just like what we do is nothing more than a derived version of a very simplistic approach to the market. So ultimately, what are we having? Lower prices are being met. We have a huge drop off. This is gold, by the way, as you can see. Right, so we had this uptrend, then we finally dropped down. We broke structure just normally, right? Structure can be broken. Even retail understands it's a structure break. It's all good. So we might be selling, right? Now what happens? As we get to these lows, what is this wick showing us? Well, first of all, it's showing us that a lot of buyers are getting involved in this market, and those buyers get liquidated. Fantastic. Now at the same time, as this is happening, we're starting to print what? Equal tops, liquidity in the form of trend lines, and more liquidity in here. So again, think about what's actually occurring here and think about the lower time frames. If you're a retail trader or an emotional trader watching the price action on a lower time frame, what you're seeing when you see this is you're seeing prices. Let's get out our best tool in the world right here, right? What you're actually seeing when you see this right there, this right here occur, right, on a lower time frame is price that's doing this. It's making a huge up candle, huge down candle. It's making some up candles, some down candles, right, coming up to test it, going lower, creating a huge support, also creating, most likely than not, right, a trend line. It comes up, touches that trend line again, right, maybe like right here, right, then goes lower, right, it drops even lower. So again, excuse the very shitty drawings, right, comes up, makes a high, comes lower, comes up, makes another high, comes lower, right, and continues going lower. So that's what's happening on a lower time frame inside of this area right here. We don't have to go on a lower time frame and see that. We can tell, right? Because we understand the fractal nature of the market and how it moves, we can see that as it's being printed to us on this 2-hour chart. So on a lower time frame, we have a high, we have a lower high, we have another lower high that's giving us that liquidity line, right? That trend line where people are getting involved in sells, right? So people see that we're selling now and people are selling, which is why a lot of the time, institutional order flow and even retail could have this similar bias and still both be correct about the direction, but still, who gets liquidated before the move? Sometimes smart money even gets liquidated before the move, but most often, retail gets liquidated before the real move happens. More often than not, people already know which way the direction is going to go. How many times did you know exactly where it was going to go, right? You got liquidated, you thought that you had to buy a swap, maybe you even sold in the other direction or bought in the other direction, and then it finally took off in the original direction, you went, ah, shit, I should have seen that, right? Like, whatever it might have been. Happens all the time. Either way, we have this lower price action being put into place, lower lows, lower highs, or actually we have a lower low, lower high, and then even on a lower time frame, right? Because we have to remember this fractally, we're seeing lower highs be put in place again, lower low, lower high, and it's all respecting, right? We maybe liquidate that, but we stop with a wick here. And on a lower time frame, what does that look like? The third touch of this trend line. So people are getting involved in sells here, and then what happens? The banks or the composite man buys up through them. And again, what's in here? Most likely a Wyckoff distribution, but we don't have to make it complex. We can keep it simple and look about why we got involved here. So here's that move up, that move down, right? Breaking it down. Again, there's an order block in here. Maybe use this order block up here. What is this? A test of that order block? The mitigations of it. What is happening everywhere in here? People are starting to sell potentially this head and shoulders, right? This wick here, maybe they see this, I'm not sure. They see this neckline, right? There's many opportunities or reasons that retail might have been involved here. I'm not going to get through all the ways. There are so many things that we can see here. And again, this is a 2-hour chart. So if we looked at this same price action on a 15-minute, a 5-minute or something like that, you could all see the reasons that retail might have been stopped out on this. Either way, we have a move down, move back up that tests that, right? A move that drops down through makes this high. A move that drops down through makes this high. Now, what does this swing high and what does this high do? Again, so remember, because the market's fractal, this high of this candle is actually an equal high on a lower time frame in the form of bodies or even in the form of a resistance, right? So people are seeing, people are seeing this, that before that big up move happens right here. And that big up move is, where is it? This one right here, this blue candle that goes up. So what's happening here? Well, first of all, remember, liquidity exists almost everywhere in the market, right? Above every swing high and under every swing low, there is liquidity in the market. So there's liquidity here, right? There's liquidity here, liquidity here, liquidity here, liquidity here, here. We can just do this all day long, but we're not going to. Anyway, we have this big move up, which makes what? That goes to pick up all the orders that rest here. So again, we're already in a sell scenario. We've already liquidated these places here, made an order block, made an OB 2.0 off that, made an OB 2.0 off that, coming to make a new OB 2.0 off the mitigation of that. Now to do that, we engineered liquidity before doing that. So what's happening here? You have emotional traders, not just retail, but just emotional traders and retail getting involved in sells here. Because guess what? They're correct about the direction of the market already. It's going to sell, and I've seen it sell, and even though I did send this out prior and it did sell, we've already shown you it does sell off. But why did we do this? We have this big move up, and we took out the people that have already sold with their stop losses, so we use that to take profits on behalf of the buys, and the people that were looking to buy this outbreak, thinking that if this ever broke, since structure was going lower, right, they'd be buying this, expecting prices to start taking off. So again, if we were to look at this now, actually, we're not going to do that right now because that's after the fact and it's going to confuse a lot of you. But again, what's happening above this? People are looking to buy. This goes above, people are buying, and then we eat up those orders. We get involved in more sells, which is why this will never kind of fail. Like, it will never go... the reason smart money will always be around is because smart money is nothing more than understanding the footprints. And the footprints are caused by the liquidations of people. And as long as there are people trading and getting involved preemptively, and there are, especially emotions running rampant, especially the fact that a lot of you smart money traders still get emotional and get stopped out by stupid shit, and a lot of you can agree with this as well, and then getting liquidated. So that liquidation happens and we have a huge move down. Now, before this candle even starts forming, what do you have here? You have an order block. This move up, move down, that's it. You have nothing more than an untapped order block, okay? And what we're expecting is, that's our POI. You can be involved in that on the beginning, focusing on targeting what now? These lows and these lows. Because what do all of these lows function as? Liquidity. Because what's happening to emotional minds now? Well, they're starting to see that they got liquidated on all their sells here, right? Some people still are in sells and are happy about it, but some sellers got liquidated, and now we're starting to see this as a trend line, starting to see this as a support that's holding, starting to see this as a support that's holding, right? Looking to potentially get involved on all the buys to the top side. right? So what are we going to do? Well, we're going to mitigate this order block, whether it's at the open, the 50% or even higher, and then drop significantly lower to take out that liquidity. And now we can go back to the actual chart. So that's what you see happen right here. And again, you can see this little liquidity line that I drew. So there are multiple liquidity lines in here. So again, those are these original liquidities we were looking at, that low and this low. That's the ones we were targeting, right? And then you have this trend line that was forming here that, as you can see, got liquidated, right? But then started to form another trend line off of this. So again, you had more people looking to potentially be buyers off this. I don't know exactly how retail does this, but it doesn't really matter. Either way, what do we have here? Here's that move through those liquidity highs, the move down, creating that order block. Here's a move into that order block and that move away. And that's it. The simplicity in this is what I wanted a lot of you to understand from Smart Money. It's the fact that you don't have to make your journey super enticed and hard. Understand how to read the market like this, and then look for the crazy POI stuff, tiny entries, back-to-back fucking flamingo-ass flop, and go insane with it, right? I have no idea what I just said, but you can get insane with it and get onto the 30 seconds, 15 seconds, and get fucking crazy and analyze only one pair for the rest of your life if that's what you want to do. But first of all, understand how simplistically you can get involved. This was nothing more than a move through highs, a continuation lower on an already bearish assumption, right? With the move through liquidity, the move down, and expecting this order block, right? This whole thing here. So again, let's delete this right here. Let's go like this. Where's our little back testing tool? Right, let's go like this. Just like this. Here we go. Right, expecting that to be an order block that holds. What do you see now? It's just an order block, right? That moved through highs, that moved through these highs. So again, on a lower time frame, continue to think about this. This is a 2-hour chart. So on a lower time frame, what do you see in here? Well, there's starting to be trend lines printed. People are selling that. Then what else do you see? You start to see resistance lines printed in here, right? So these are like equal tops. People are selling that. There's so many orders being put into this market, even at areas like this. You have to remember to see this fractally. I'm sorry I say that word so much. You guys must be getting sick of it, but remember to look at the market fractally. You don't have to be on all the time frames to see it. What you have to do is understand what's occurring on all the time frames by looking at one. That's when you know you've kind of mastered Smart Money, or at least understood it to a much greater extent. Let's get rid of this line for a second. So again, if we were to do what we did in our last video where we spoke about POIs, what's our general POI? Well, it's the wick to wick of this order block, right? That's just an order block right there, right? Now, what's interesting about wicks like this right here? Remember we spoke about how wicks are sometimes order blocks on lower time frames. So let's actually get lower and refine this. So this is something I did after. So again, the thing we sent out, so let's delete this. Let's go back to this real quick, right? So the thing we sent out was just this in general. But at the same time as we're sending this out, consider that area as a POI, right? So this is what's interesting. You can either be a 2-hour, 4-hour swing trader, or I guess it's not a swing trader, it's a day trader kind of, and get involved here and just take that 1 to 3, targeting those lows. Or you can get crazier about it and look inside here for Wyckoff to unfold and get involved on that. Or you can look inside here to see more order blocks, right? Or refine this order block to get involved on areas like that and get involved on those, right? So there's multiple ways to get involved. Again, like I said in the previous videos, your arsenal allows you to get involved a myriad of ways. It's gonna come down to you how you want to get involved though. So let's get lower and refine this a little bit. So we're just gonna go to a 5-minute instantly and look at this, okay? Well, now what do you see in this? Well, you start to see that there's really little price action you can be kind of looking for here. Everything is most likely filled. So let's get down to a 1 minute and just take a look at this, right? Now, what do you see up here? Again, there's very little to see. Potentially, you can be looking at this untapped block right here. Maybe it's even better on a 30-second. Let's take a look at a 30-second chart, right? And there you go, right? So you guys can all see this order block right here, this move up before the down move with imbalance right here. So there's stuff in here that has not been mitigated yet. So potentially, you could use that as your refined block. And what's interesting about this is that your refined areas or your refined order blocks and stuff like that might not always be hit. Okay, so that's where the area is, right there. As you can see, we have that highlighted right there. And what you could do is you could be involved as a seller right there because it's refined now, right? With that same stop loss just above that high, with that same take profit just below these lows, right? Below all these lows because you're looking for them to get targeted, as you can see right here, looking for the lows to get targeted, same low getting targeted. This right here on its own, as a normal day trade, as a normal entry, would be a 1 to 3. This same order block, a little bit more refined with the probability of you potentially not getting involved, is now refined to a 1 to 21. That's how you go from simplicity to advanced. And then on top of that, you can stack entries when it comes into here off your OB 2.0s, which we teach on the channel as well, right? Or you can use the mentfx block, which we teach in the mentorship. Join that if you want to find out what that is. Pretty cool thing, might blow a lot of your minds. Either way, let's play out price now. So price comes up, right? You could have already been involved, or, okay, wow, that was actually very quick. As you can see, I think price tapped us in, but we'll keep it on the line. Maybe it didn't. It looks like it did. If I put it on the line, no, it did not tap us in yet. So maybe it doesn't tap us in actually. Right, so let's see. Okay, so actually it does. So as you can see, price comes back up, taps us in, right? And then we'll just play it out, and it meets lower prices, and it comes to meet that low. Now again, as price begins to play out, based on the previous video, you're not just holding this fully. You're either partialing at these lows, because what's here? Liquidity. There's, again, below this low and this low, there are people that are looking to sell. So we could have, right? We don't know for a fact. We could have went like this and taken off higher and maybe came back to this order block, or even went even higher, right? We're not always 100% sure. So we hold it properly, right? Or if you know that your 1 to 3 was almost guaranteed to make it to these levels because of the way you've seen it happen in the past, then you know that you can trade this and hold it, right? And that's a very easy 1 to 20 hold. That was nothing more than an original, let's go to the open, 1 to 3 trade, right? So it's all about the refinement. And then what's interesting is if you go inside there, you can find the OB 2.0s that form and how to get involved. And then you can look at how to partial along the way, how to break even, right? That's going to depend on you again. Maybe you'd break even after this low gets breached right here, because then you're expecting that most likely price should hold in a downtrend, right? Because technically, if price breaks this, it shouldn't get back up here unless it's to go way higher. And at that point, you should be breaking even on it. So either way, you guys can now see how we took this POI, right, and refined it to the POI in here, right? And what's even more interesting is you didn't even have to do all this. Instead of going to those lower time frames and going crazy over the actual OB that caused this, you could have went like this and said, okay, well, here's my point of interest, right? Here's my general point of interest where I can get involved. Let's go back for 1 second on this, just like that, right? Here's my POI that made that order block that traded through those highs, mitigating previous order blocks that were taking people that were selling out of the market to take the market lower, right? Hopefully this stops lagging in a second. I guess it's not going to. That sucks. Okay, we got it to work. So, oh no, we didn't. All right, let's go and do this again. And now we'll wait another 20 minutes for this to work. All right, there we go. That's fantastic. So again, either you could have done what I just did and went crazy about it and went lower and found the actual order block and been involved there, or you could have gone involved and watched it on lower time frame and got involved on multiple trades within there, or you could have stacked entries all the way down. That's pyramiding, whatever you want to call it. Or you could have stayed on the 2 hour, decided this was a block indeed, right? Been okay with missing this trade if it didn't get this high, and then getting even crazier and going, okay, I'm just going to fib the 50% because I know that at 50, we can still have mitigation, just like that, and look to sell that, right? That is still the same trade as the original 1 to 3. All it is more refined. So the chances of you getting in might not be 100%, so we're just going to have that over the high, might not be 100%, but if you get in, that same trade, which is just going to run to this low, is now a 1 to 37, right? That's 1 to 40, right? And we can see how that plays out if it does. Let's play this out a little bit. Hopefully it plays out a little quicker. I think it's just lagging a little bit. Yeah, there you go. So we still do get tapped into it. So you get tapped into it. We actually make a total low of about 1 to 50. So again, this is how you can get absolutely crazy RRs. And notice how I did nothing else except for found an order block that's worth a 1 to 3 trade normally and made it into a 1 to 50, 1 to 20, right? Based on refinement. And that's it, 1 to 37, 1 to 40, right? And that's how, or at least that's why this video I thought was an important thing to bring a lot of your attention to. So a lot of you can recognize, and again, remember that we're ultimately just looking at liquidity grabs and then getting in depth on that, right? And that depth comes from the mentorship, comes from these videos, comes from Wyckoff, comes from volume, comes from confluence, comes from divergence, and all that other stuff that you can start adding to it. But it's all based on the fundamental principle of positions in the market being liquidated before the real move occurs. Right? So don't make this journey as confusing as a lot of you have made it, right? Take a step back and recognize that sometimes the normal 1 to 2, 1 to 3 trade can be refined to a significantly better, perfect entry type of trade like this. So if we actually wanted to just take, just for fun, because I'm about to end this video, let's actually take a look at where this came to respect. Again, you can do this after the fact as well, just to check this stuff out. So again, we sent this out, not the crazy one. I could have sent it up here, right? It's the same trade. The only difference is the 1 to 3 versus the 1 to 30. And I mean, that's a pretty big difference. That's like a yearly salary versus, your weekly RR, like the 2-day RR, something like that. So again, let's take a look at where this actually hit. So let's just highlight this place right here because I just want to know exactly where this hit. We'll get down back to like a 30 second. If this loads now. Fantastic. Right, so we'll zoom out now. So don't get too confused with the zoomed out chart. Let's go find that area where we got involved. And let's go look at why it tapped into it. All right, so I think that's it right there. Let's go look at what it tapped. All right, so there you go. You can see that. So it actually tapped the actual last order block, the last move up before the down move. And what's crazier is, again, as you saw us do it on the previous, time frame, you could have done it here too. What's this wick? It's an even smaller order block. If we got to like the tick charts and even 1 second charts, so again, don't get too insane by this. This could be a fine area too. But guess what? Maybe this one didn't get reached, right? And I don't think it did. This is the last area that got reached, right? So again, sometimes your refinements may not be hit, right? But just like we spoke about before, you have a general POI where you can look for things to happen in. Then you have a refined POI where you can actually look to get involved if that's where you want to get involved. And then to get involved, you need to have a certain thing or a certain amount of confirmations happen. That's all up to you. So thank you so much for watching, guys. I hope this made a lot of sense. Keep it simple. Thank you so much for watching my stuff. I appreciate everyone that's in the mentorship, everyone that's learning with me, and everyone that's taking anything out of the videos, publicly or privately. So thank you so much, guys. Have a great one and enjoy your week. See you guys.